Economists say that the housing market is at its most unaffordable levels in recent history, and inventory is the biggest issue at play. Talking about it right now, joining us, talk about housing, mortgage rates, what is actually happening here. Compass co-founder and CEO Robert Refkin, good morning to you. We were just talking off air just about how tough last year was in terms of just overall volume of sales. What is happening?
Last year, we saw the lowest level of transactions in 29 years, a period where the population grew 25%. We are seeing is there's just not enough inventory. This year, we
Hold on, the population grew by 25%?
Yeah, over the last 29 years.
Oh, the last 29 years. Okay. I thought it was, wow, that must have been a big year in 2022.
Yeah, so there's just, it's a structural challenge. There's not enough inventory. We are seeing more inventory grow, and the positive news is for buyers.
Right.
With 25% more inventory now than a year ago, and there's a path that this time next year will be at pre-pandemic 2019 levels of inventory. We expect prices to stabilize and grow at 2%.
So how much of the challenge, though, is the new buyer market, meaning people are just priced out on one end, and then there's the sort of what I would describe as the mortgage rate mobility problem, which is somebody's bought a home, locked in at a good rate back 4 or 5 years ago, and now really can't move because the rate they're going to get today is much worse.
Yeah, we call that financial prison for some of these agents. They're locked into a mortgage rate, and they just can't get out of it.
Right.
And so it's a lot better than it was 3 years ago. 3 years ago, this...
But how, I guess if you were to look at the new buyer market versus this sort of locked-in prisoner dilemma, how does that pie chart look?
It is more for the locked-in.
Okay, so the locked-in is the bigger problem.
Yes, 75% of homeowners 3 years ago were locked into 4% mortgage rates or below. So if a year and a half ago when mortgages were 8.2%, now it's much better, 7%. The delta between 8 or 7 and 4 is just too much for people to want to leave. It's a financial asset. They don't want to lose it.
Plus, we keep thinking that rates are going to come down. And even though the Fed has cut rates, we have not seen mortgage rates come down commensurately.
And that's the good news. Over the last 3 years, this sentence has been pervasive. I'm just going to wait until mortgage rates come down.
Yeah.
The good news about September 18th, when the Fed brought down rates and mortgage rates went up, we don't hear that statement anymore. And so on the negative side of the ledger, you have affordability, prices, mortgage rates. But on the positive side of the ledger, you have the end of the statement, I'm going to wait for mortgage rates to come down, and you have more inventory.
Okay, so take us around the country real quick. Miami, let's do Miami, Florida. Everybody was rushing to Miami, Florida during the pandemic. What's happened to prices there? So
Miami, Florida, is one of the 8 states where there's actually more inventory than the pre-pandemic period. So of the large states, Florida and Texas are in that group. So those are markets where you're seeing more price drops than any other market. It's upwards of 40%.
Florida has its own issues with the condo resetting, right? With the new rules that require everybody to go in and make good for all the fixes that they haven't done for years.
Exactly. More HOA fees, higher insurance. You can't
but you're
get
seeing
insurance.
the interesting part to me was it's happening in Florida and in Austin, Texas.
Yes.
Right. And Austin doesn't have a lot of those same issues. And so what's happening?
These were the markets, the biggest boom markets on the way up, and they're the ones that are feeling the most pain on the way down.
It's You're saying just off by 40%?
More than 40% of Miami, more than 40% of Austin, more than 40% of Dallas have price drops today.
Price drop. Okay, so the price drop is not by 40%.
No, just the percentage of the total inventory.
What kind of price drops are we talking about? And if you were to project out for those who are looking for property in an Austin or in a Miami, do you say to yourself, wait another year because it's another 10%? I don't know what it is. You tell me.
I would say this year will be a great year to buy in those markets, but in other markets. Of the entire country, 33% of the market, of the entire country, 600,000 homes, have a price drop today. That's the second largest number of price drops in 10 years. What about New York? New York is actually, it is moving up. Right. So New York State, the inventory is basically flat year over year, and the overall prices are, as a result, up 16% year over year. Would you go buy on an investment level or any other level in the Palisades right now if you could? I would. You would? I would. Because you just think it's going to... Los Angeles is still one of the most beautiful places in the world. It will come back in an incredible way after all catastrophes. That tends to happen. Right. It will build more safely. It will build more beautiful. And I've been pleasantly surprised by how many people want to stay there. Yes,
Right.
there are the stories of people that are moving to Dallas, Austin, Miami, Orange County, San Diego, San Francisco, or New York, but many more stories.
They're playing us out. Most undervalued market in America today, if we had this conversation 5 years from now.
Oh, gosh. The most undervalued, I would still say condos in San Francisco.
Condos in San Francisco, folks. You heard it here. Robert, thank you.